Hello, this is Ahura, and I'm with you with another daily market update. Today, we are going to watch, as always, as every morning, we are going to watch what is happening at the market, what happened yesterday, what we are expecting for today, and if we want to trade, how we have to trade and take care about the markets. As you see, yesterday we had a free fall in the US dollar index. We tested the lowest level at 93.60 to almost 2 or 3 at since the lowest level since September 28. These data, this it happened after that when we had a weaker than expected U.S. Industrial production. Yesterday, U.S. industrial production for September is by 1.3%. This is and this weakness in industrial production after weakness in Chinese GDP. Why I'm telling after weakness in Chinese GDP? Because China is the biggest business partner of the U.S. It's the biggest market for U.S. export, and its biggest exporter to the U.S. U.S. is importing more than every other countries from the China. So this weaker than expected data both in China and both in the U.S. and China increased the expectation of later or delay in a rate hikes from the Federal Reserve. That was the reason of the having a longer time, the lower interest rate was the supporter for the stock markets to increase. Yesterday, S&P 500 and the Nasdaq, they closed higher, especially the Nasdaq with the tech stocks like Apple and Facebook. They increased amazingly with the lower interest rate. Yesterday, interest rates decreased to under 1.60 again after increasing to 1.63-64% for the US 10 years bond yields. So this rate, this decreasing yields helped the US dollar index to fall, actually push put the US dollar index under pressure, helped the tech stocks to gain, and US and gold as well. However, it's not going to. It doesn't seem something long term, because the market is still expecting to see. As yesterday I told, this is the VIX. As you can see, the market risk also is decreased. We have the lower risk still under 17, but it's as I told yesterday, it's not something that we can wait it for. We can see that for a longer time. Market these days will be more than other days, more than before. This will be affected by the earning reports, and this earning reports will create a volatility market. However, with the midterm, especially for the next 1 or 2 months, still we are again expecting to see the worries about the interest, worries about the inflation, worries about the shortage in the labor market, as I told you yesterday, worries about the the data that we have really showing that the markets, we have to worry about the inflation and higher productions, higher producing prices. This data will again put the stock markets under pressure in the next days after, especially especially for this week and week ahead. We have while we have the most important, the most busiest earnings this week and week ahead, and then from the 2 weeks later, the stock markets again will start ease. So for this week and next week, we are waiting for the volatility market. I'm not telling bullish or the bearish market. I'm just telling it's going to be the volatility market, volatile market with the higher jumps and the dumps in the next this week and next week. About the US dollar, also the same. For the US dollar also, as after yesterday weakness, this yesterday weakness again, as I told with the published data, it seems like something short life. It doesn't seem something like that he can go so much further. But yesterday also in the Dow Jones, besides other when we had a weakness, when we had a positive or better than better movement and gain in China, in other US indexes, Dow Jones after Dow Jones Industrial Average, with the weaker than expected industrial data lost, and it was closed lower. Today, the Asian market is following the yesterday's gain in the Wall Street, but as I told, Chinese expecting Chinese also from one of other reasons also is that the Chinese officials also after yesterday's weaker than expected data, they talked about the possibility of more stimulus and more support from the central banks. So that was the supportive for the banks yesterday. Today, besides the earning reports from the Johnson & Johnson and Netflix and Philip Morris, we have very important speeches today. Actually, before still talking about the speeches, we have the API American Petroleum Institute weekly report for oil later today in a late in a US season, and also we have the building permits from the US building permits that we have to take care about them. However, besides them today, the focuses in the market will be on the speeches, especially from we have the Bailey from Bank of England. We have Lana Ellerson and Panetta from Central Bank of Europe. We have German Pupa Mutter. We have FOMC members like Dali, Bauman, Bostic, and Waller. They're going to speak today, and this speak from the central banks members will be important. Why? Because they're going to tell us what's their central bankers' idea about the current market situation and what they're going to decide in the next meeting. In the last days, we had a conversation from we had signals from the Central Bank of England (BOE) that they would like to start tightening policies faster than before, earlier than before, as Mr. Bailey talked 2 days ago. And today he will speak again, and we're going to see that what is the final expectation and a final idea of the Central Bank of England. At the same time, today we have the speakers from from the Central Bank from Central Bank of Europe also, that they're gonna also tell us what exactly Central Bank of Europe, European central banks thinks about the inflation situation in Europe and what they're gonna think, because after it, most of the major of the central banks, they started going to the hawkish policy side. There's expectations from the Central Bank of Europe also to change its policies. At the other time in the U.S., as you know, we have next Federal Reserve meeting in November 2 and 3. So these days will be the last days that we're gonna have the speeches from the FOMC members, because they're gonna go enter the 2 weeks silence before FOMC meeting. So that's why it will be very important to watch and follow these speakers, the speaks and the speeches, and understand what the central banks members are thinking about the current economic situation. This is the overall market for today. We don't have that much news and that much things happens in the market, and this is what you have to take care about in the market. So overall market sentiment for the stock market is up and down for this week and next week. Still for today also we are thinking the same about the most important earning reports. I told you about the US dollar index and gold, what happened in the gold, also explained about why it's decreased and why we are waiting for again to increase. Increase, why we are waiting for again for decrease to see the prices around this area, not so much. We don't have that much reason to see that the gold price increasing much more, and at the same time we don't have that much evidence that they can tell us the gold price is going to fall right now in these days much more than this. So gold price is somewhere around this level, not so much high, that's not going to be that much high, not going to be that much down. This is about the gold. And what else we have? What else we have? This is, yeah, that's what we have in the oil market. In the oil market today we have API reports. Yeah, let me show you the oil chart as well. This is the crude oil chart. Yesterday we saw the weakness in the oil market, but this weakness, it was after weaker than expected economic data in China and United States this day today, but still in a long term, as we see in a long term, the market sentiment still is a positive for the oil price. So this is not something what we saw yesterday. It is that the same thing that we saw that happened in the last weeks in the market. Oil prices increasing, then we're gonna have a correction to 20 or 50 period moving average, and again increasing. So this is the same pattern is going on, and we're still expecting to see the same patterns in the next weeks and higher prices for the oil. Today we will have the API, and tomorrow EIA reports for the market. They may have the short-term reaction in the market, but overall market direction is not going to be changed for now. We're still waiting for higher prices for the oil market. These higher prices for the oil market again means that inflation worries. Inflation worries means that in short, midterm, we have to see the weakness in the stock market. So that was main reasons that I was talking about the worries about the stock markets and next the concerns for the next couple of months. Thank you so much for watching this video. Don't forget to follow, don't forget to subscribe, comment, and like the video, and let me know what you exactly want to have or to cover in the video. So in the next day I'm gonna have a better idea of what you like to be covered in these videos. Thank you so much for watching, and have a good time. See you guys tomorrow.